straight into it. Leanne, your thoughts on the session today?
James, look, unfortunately, it was a pretty disappointing one in the end, particularly given that very strong performance yesterday, but certainly indicating that we are continuing to see this volatility coming back into our market. Really, we were led most of the day by those weak offshore leads, and unfortunately, we really weren't able to find much support across any of the sectors. We actually saw all sectors closing in negative territory. The market really was under pressure from the get-go this morning, despite seeing a lot of strong economic data that came through. We saw that trade deficit had actually narrowed, coming through better than expected, and those building approvals were actually about 3 times better than expectations. We saw that Aussie dollar lifting, but unfortunately didn't really see too much of a turnaround in the market. It really was those weak leads from US and European markets that we followed most of the day. Of course, we saw some disappointing economic data coming out, but it was, of course, continuing ongoing civil unrest over in Hong Kong, which is also continuing to add pressure on markets around the region. I think an interesting one today was that materials sector. It still continued to come under pressure, despite seeing that iron ore price picking up about 1% overnight. We also saw copper rising, and gold was also stronger, although we did see some of those gold stocks performing quite strongly, providing a bit of a bright spot, but unfortunately still saw the likes of BC Iron and Atlas Iron coming under pressure, and also that energy sector, despite seeing those oil prices bouncing off those 2-year lows yesterday, still saw that energy sector coming under pressure. So unfortunately, I think today's performance really reflects a lack of confidence from investors, and they probably are spooked by this potential imminent correction which might be coming.
Leanne, it's a difficult one. It's like trying to measure a length of string, but in terms of looking for long-term gains in some of the growth, cyclical sort of areas of our market, is it something we're seeing? Is it something we're going to see soon?
James, I certainly think it is a difficult one to predict. Over the last couple of trading sessions, we have started to see some signs of investors jumping back into some of those growth stocks, some of those high momentum stocks, such as those healthcare sector, and also coming out of the telcos as well, although they are high yielding, particularly the Telstras. But there is sort of some evidence that we are starting to see investors jumping into some of those stocks. But I do certainly agree the high yielding stocks are really still the main focus, particularly for a lot of those self-managed super funds. So now that we have seen a bit of a correction in the major banks and those financials pulling back, I do think we could continue to see investors jumping back in and finding some support in that financial sector, although we didn't see that on the market today. But I do think that could potentially be a driver, certainly in the short term as well.
Leanne, your own thoughts on Telstra?
James, look, certainly we do remain quite optimistic. From memory, I think we actually have recently pulled back to a bit more of a neutral on the stock, just given the fact that we have seen a lot of growth coming out of the stock over recent years. Of course, we know a lot of investors are in Telstra for that high dividend yield, so I do think that really is going to underpin a lot of support in the share price there. But my own view, I do remain optimistic on it, particularly looking at a lot of its growth prospects, particularly coming out of Asia as well, and also looking at the NBN as you have been talking about. So yeah, definitely remain very optimistic, short to long term as well.
As is mentioned, Leanne, one of the key sectors very much that healthcare space. Ramsay today completing the acquisition of the French hospital operator. Good news for the company.
It was good news for the company today, James, although we actually did see that share price coming under a little bit of pressure. I think that might have been a result of potential currency pressures and maybe some regulatory risk as well that may be involved. But overall, the actual acquisition does look very positive in our mind. They are actually now going to be one of the top 5 hospital operators globally. And looking at some of the other positives, of course, it does add to Ramsay's portfolio of hospitals and facilities over in France, and the deal is expected to generate about 40% of Ramsay's overall revenue. So it certainly does look quite positive. The stock, of course, as we know, we've been talking about the healthcare sector, does look very expensive at this stage. It trades on a forward price to earnings ratio of about 25 times. So it is expensive, but the underlying business does remain very strong. They have a very well-run management management team, and a lot of their underlying growth prospects do remain very strong, underpinned by some of those demographics as well. So we actually very much like the outlook on the stock, but the valuation does look quite high at this stage. We're a bit of a neutral, but given the news today, that acquisition certainly does look very positive.